In this video, we are going to be analysing Zoom, ticker ZM. If you want your own stock analysed, throw that in the comments. We'll get round to it when we can. Now, to get straight into it, on the left, we have a 6-month chart. On the right, we have a 1-year chart. Now, what we consider this is the shorter term trend. And on the right, we have the longer term trend. So this is always key because if the two deviations are trending the same way, really that's the direction we look to play. So we can see on the 6-month we're trading down, on the 1 year we're also trading downwards. So to me this means I'm short bias on this stock. Really, I don't want to be trading this long, I only want to be catching the shorts. Now, what are key levels I would be paying attention to then? So $72, this is our first deviation on the 6-month. $74.50 is our first deviation on the 1 year. So really this range is really what I'd be paying attention to, because again, we do have our earnings coming up. We've got them in a few days from now. So that is quite key because this earnings released will obviously either push us big move to the downside or big move to the upside. Most likely a big move. Normally you get a big move on earnings. So when we get this release, we get the move. If we push to the upside, again, we're not going to trade the actual release because that's either going to be after hours or pre-market. But again, we're probably not going to be trading that. We're going to wait for the market to open. So if on that release, we push it into the range of here, then again, if markets open and we're trading within this range, then we can potentially, the first time we hit this, look to trade that short bias. Now, if markets open, and again, this is considering we went to the upside on earnings, and we open up around 74.50 or above, then really I'm not looking to take any trade until we hit our next deviation. And in this case, that would be $77.80. If we break that, we have our next resistance 83, 89, 91, and a final one at 107. So again, these are key levels to be paying attention to the whole way. And again, it's really, I wouldn't touch this stock until we have earnings. And then once the earnings released, what I would be paying attention to is where do we open up. So again, don't really care where we move to after hours or pre-market whenever the earnings release it is. If we pop straight up to and traded, let's say in the range of $80, we're trading here. My main focus, if you're a long bias trader, you want to wait for a pullback to $77.75. If this level can hold, then potentially look to play it long bias. If I'm a short bias trader, and again, to me, I'm short biased on Zoom. It's downtrending over the past 6 months and the 1 year. So if it pops to the upside, I'm looking at shorts on it. And my shorts level come at $83.50. If we come into this level, again, that's saying we come out of earnings, we're trading around here. If we push up to 83.50, I'm looking to play that short bias the first time we hit that, looking to trade that downside move, locking in some profits when we're $1 or $2 in the money, moving my stock to break even. And then again, ideally we play the overall reversal if it's an overall reversal, but again, we can't always guarantee that. That's why we lock in some profits. Then if it does only get a temporary pullback and we retest this, most likely we will break. So again, that's why we want to be stopping out. But really, 83 would be my main focus if we can push up to this level. Quite a heavy short level to me, because again, this is our third deviation. If you understand how standard deviation works, 99.7% of the data should trade within the third deviation. So that is quite a high probability reversal area. Second deviation is at $77.75. Now this is 95%, so still a high probability area, but the third's always going to be the key one. But if we do push to $77.75, this is probably where I'll be trading it. If it doesn't hit that high, I probably won't be focusing on it from a resistance standpoint. Now, to cover the supports, we have statistical mean between $66 and $58. To me, this is a non-trading zone. When a stock is trading within its fair value, I don't like to trade it. So between that range, I'm not paying attention to the stock at all. We can see our first deviation on the 6 month is in that range. So to me, that instantly crosses it out. I'm not paying attention to that level at all. So to me, to have long bias areas, I want to see this stock coming down to $54.25. That's our second deviation. So again, what's that second deviation mean? 95% of data should trade within these blue lines. Again, it's the stock market, nothing is guaranteed, but does have a high probability. That's what I'm focusing on. So that's going to be that $54.50 or 25 cents if we break down. If we went further, we do have $48 and $41 and $25 as all supports to the downside. Again, my main focus is going to be on the 55, the 48. 48 would be key. If we can hit that, personally, that's probably where I'll be trading it. 54, considering it's downtrending on both the 6 month and the 1 year, I don't even want to be buying at that 55. To me, still too much risk on the table. Yes, we are at a 52-week low, but I'm not interested enough for me to trade this long buys. I'm only trading it from that 48.50 or below. So I hope you enjoyed the breakdown on Zoom. Let me know if you're looking to trade this coming into or out of earnings. And if you enjoyed the video, why not drop a like and subscribe. If you want your own stock analyzed, throw that in the comments. And if you enjoyed the video, why not check out this analysis video.